So how do you guys look at multibaggers in your space?
People start to think a stock worth 1 rupee, 2 rupee will become 200 rupees is a multibagger. In markets, good things are not cheap.
How do you do your analysis for stocks?
You look for certain parameters. For example, valuation would be one parameter. When the profits are trending upwards every year.
And in a time frame of 3 to 4 years, 99% people lose money.
How should one look at like IPOs?
Tata Tech, for example, 160% recently. If you get allotment to something like that and you sell it even the next day, you're going to make like close to 43,000 or 42,000 rupees. You know what I mean?
15k. Now every kid who is starting up says a crash will come, crash will come. So is a crash to come or? Guys, welcome to the podcast.
Thank you bro for having us.
We have two chats with us right here, Mr. Rahul and Mr. Ali. So basically the theme of the podcast is this, that Cool Chats Club. Cool is not only how cool you look, but how cool you think. So feel free. We don't usually do controversies or guest intros. We just keep it cool here. So let's start off by giving you the spot. And you guys just introduce yourself a bit. Tell us a bit about yourself and like how you got to the point till you are like.
So, I was born in Bombay. My full name is Azar. I was born in Bombay, moved to Bangalore about, let's say, a year and a half back to start content creation. I wanted a shift in careers. So came to Bangalore to focus on content creation, became a full-time content creator. I've been in the markets for more than a decade. So took that knowledge and now churning it out in the form of content, seeing where it takes me.
Let's go. What about you, Rahul?
So I started in stock markets. Those were my expertise. It's been more than 20 years since I've been in the markets. So I've traded and pretty much in all markets in the world, all commodities, all financial markets I'm talking about, not stock markets. So I started in 99 my first project in Sri Lanka. It was a manufacturing plant. We started in 1999. We ran it till 2003. Then 2003 to 2006 we were running another plant in Jammu. 2006 to 2008 I was trading in commodity markets in London Metal Exchange, New York Exchange. MCX was recently launched. And then we had this 2008 ka crash which was very unexpected. We had some losses and things changed. Then I started a new project in 2008 in Africa exporting power cables. I was manufacturing power cables in India. I took my company public in 2013.
Very interesting.
I listed on Bombay Stock Exchange. We touched around 2018, we touched the peak of 500 crores revenues. And 2019 I exited the company. And then we had this COVID crash. From there I got full-time cause 6 months we were stuck at home doing nothing. That time I started trading in the stock market. Became more of an active trader. I had the knowledge, I was more of a passive trader. Since then, after that we started, then we had this great bull run from 20 to 2021. And then I shifted, I got a broking license, I became full-time into financial markets. I came to content creating journey last year. I started a channel by the name Market Kya Kehti Hai. We would like to educate and talk about financial markets and how we can share our thoughts and how we operate in the markets. The goal of the channel is to make sure people are well aware and educated in the stock market and get on the right path of making money and finding success in the markets rather than going for the places of become an quick crorepati overnight, which apparently never happens.
So both of you have had such interesting careers. You have been a CA yourself, been in the industry, you have been in the industry yourself. As you just said, what is it about the creator economy right now that interests you both? How is life different as a content creator? As people compare it to like the next Bollywood, or people compare now influencers to celebrities, and there's a lot that's going on in the creator space right now. So what's your perspective on it? How do you guys look at the creator space?
Well, I love content creation to start with. I mean, you know what they say, right? Every Gen Z and millennial wants to be on YouTube. You know what I mean?
Everyone wants to be
everyone wants to be a YouTuber. So some form of content creation does appeal to me. and been in the markets for many years. So I have a fair amount to teach. I can sort of so that's what I do. I have a channel by the name of Mr.talkstock, where I teach about stock markets and investing and doing it the right way. It's a more educational approach towards it. And content creation was, well, it was a natural way for me. It was a natural outlet, you could say, for me to reach a wider audience. And I consider myself very lucky because I love the job that I do, which is content creation and stock markets. So I anyways am into stock markets, and I get to teach it also. So it's
good,
quite
right?
exciting,
Yeah.
That was my motivation.
I look at it very differently, as a matter of fact. We have a very clear perspective. We are not in here to get some kind of fame, but we are here to get kind of acknowledgement. For us, social media platforms are free distribution. We are here, it's free advertising. We don't need to pay any money to anybody. We can be on a channel and hundred thousands of people can see me and understand what you're trying to do here. So that is the goal. That is how we look at it. Wherever we get any platform where we get distribution, we are there.
So
All-
how has your life changed after being a content creator? The impact has bring not only on the others but your lives for say. Right now, let's say Logan Paul, what they're doing with Prime, for example, sold 1 billion bottles, and now they're challenging Gatorade. for
Exactly my
example,
point.
right?
This is why I see social media very differently than generally people do in India. In other countries, entrepreneurs enter social media as a tool to advertise and launch products and support their businesses and scale their businesses. Here, what happens is the Gen Zs, like he talked about, the millennials, they've gotten the fame from social media, but they have not built a business and they don't know what to do on it. They don't know how to monetize it. They don't know how to use that audience to build a business. Why they don't even know why they are building this audience. Just the dopamine kick of this likes, following,
views.
and the brand deals coming in that gets them the status or a mindset that we are a celebrity because brands are coming to us. They are using your channel to distribute, fine, but that is not the way social media is supposed to operate. If you think from an international perspective, how people are operating outside India.
Yeah, always. Everyone starts with that whole, from outside it looks quite glamorous. So social media, like they're dealing with brands, they're making money, they're doing this and that. But the reality is, unless you build a product and you build a business around it, that's when you're a serious creator. You know what I mean? Then you can sell your product instead of just making random, let's say, videos. You know what I mean? So having a business around it and having a product around it is very essential.
Certainly like building a digital empire around it, and
Correct.
whether it's goods or digital products or whatever people.
Whatever
you're-
be your field, whatever
Yeah.
be your field. It can be stock markets, it can be mental health, it can be anything,
Any niche.
fitness, lifestyle. So it depends.
Coming to your second question, how my life has changed. Well, life has basically changed. Now people identify for who I am and what I do.
the value you provide.
Now, before social media, it was an organic thing. I was getting identification. I was very well known before COVID, and everything was. But that time, pre-COVID, there was no social media. Era of social media started post-COVID or during COVID, where it became a huge thing. The stars came
Yeah.
out, people got so much followers, they became famous. All that happened from 2020, 2021. So from there, when I started to go to events, I realized people with social media appearance were getting more attention, more fame, and more acknowledgement for their work rather than the people who have already achieved it. That's where I realized it is so important to be on social media if you want to show the world that what actually you're doing. Otherwise, there are a bunch of people who will know your work, but you cannot get that kind of audience
Audience.
who can recognize your work.
For sure.
So for that, it's a necessity for. I think it will be a necessity for every business in the world coming in time
Yeah.
to have a presence on social media. Otherwise, they will start feeling the idea that they are not catching up with their competitors.
100%. Now, speaking of audience, you guys have a raving audience that come to you for what's happening in the markets क्या कहती है. So before we come to market अभी क्या कहती है, how is the future looking forward, for anyone that wants to start out in the markets, there's so many instruments. Even in, let's say, stocks, right? You could just get in your way through mutual funds. You can just invest in stocks, or you can go through options and futures. And there's a lot of instruments, right?
Yes.
For, let's say, someone who has a bit of experience in the markets, knows what's out there in the futures and options, and let's stocks, for example, like just normal investing. As you guys have been 10 years, 20 years in the markets, there's this common, or very well known agenda that 90% of the traders lose money. So do you suggest it's better to trade stocks on a daily basis, or just invest in them passively, and trade with which instrument? And how do you guys look at the market? Like, what's your overview? Or
So the example that you said, you gave two opposite ends of the spectrum. One is you're giving futures and options, the most
Exactly.
risky end,
Yeah.
and then the other saying that you keep your stocks for as long as possible. So somewhere in the middle is the most ideal option for anyone to be actively involved in the markets. Keep an eye on your stocks. That's the way at least I go about it, and be an opportunistic investor whenever you see a good opportunity coming in. But okay, that is for somebody who's actively involved in the markets. The progression should be, when somebody enters the market, start with something called index funds. Then they are the true index funds and ETFs. They are the true most passively managed, where you just keep your money with someone and you don't need to look at it at all. You don't need to apply your mind towards it, basically, and let it keep growing. You're participating in the markets that way. Then move on to mutual funds, which are actively managed. So in mutual funds, it's your job to select the right mutual funds. There are hundreds of mutual funds. You need to select which mutual fund suits you best. So that's your skill, to select which one suits you best. So that has a little more skill element. Then finally, when you get the confidence to invest by yourself, only then start to invest. Start with large cap stocks, they are much safer. Then go on to mid cap, and then small cap, and then there's something called even micro caps. And along the way, people learn, they start to experiment with trading, intraday trading, swing trading, scalping. There are so many ways. So it really depends on the kind of individual you are. Know what you want from the markets. Know why you're investing. Invest, or in some cases trade with a goal.
And have a system around it.
Correct.
Necessarily.
Correct. Have a system around it.
Sure.
I agree with Ali Bhai in everything, but there is one thing, that all these things that you spoke about are different skills. They're not a same skill, that you have learned this skill and you've learned all other skills simultaneously. To become a doctor also, which kind of a doctor do you want to become? First you need to figure out whether you want to be a dentist, whether you want to be a surgeon, whether you want to be an ENT, whether you want to be a physician. It's not that you become a doctor so you can be an expert on everything. Is it so? Similarly, you need to first identify which type of method suits you the most. Let it be, people think trading is very easy, trading is easy to get into and we can make money, lot of money. That's not true. Like you said, 90% people lose money, and in a time frame of 3 to 4 years, 99% people lose money when it comes to trading, because trading is the most difficult skill to master. It's like being the top of the surgeon. You're fighting with the best and the best world's people, best of minds, best of technology, best of information, which you don't have.
For sure.
And they do. And you're fighting against them. It's a sub-zero game. Somebody has to lose money to gain money. So it's very easy to lose money with trading when you come to futures and options. So for that, you need to understand, do you even have that mindset
or that
to
edge,
become that capable? Edge won't come at night. Every individual edge is very different. You have to create your edge. It's like creating a thesis.
Exactly. And then testing it over and over,
Exactly.
seeing
This
how
is
long it
how
works for.
trading works.
Yes.
When we come to investing, for investing, like he said, you're already giving your money to people who've been in the market from 30 years. They understand. They have their own thesis. They're putting that thesis, which has always worked in the market from not 10, 20 years, hundreds of years. That's why indexes are made, to get the best companies out so that an investor can come in and they can derive the best return. Then comes, this is one aspect when it comes to trading. Then comes the individual aspect. Are you basically, what is your goal? Do you want it as a part-time thing? Do you want it as a side hustle? Do you want it as a passive income? Or do you want it to be a full-time trader only?
Yeah.
मेरे को तो trader ही बनना है. I want to be a trader. That's about it. then you give it 4 to 5 years and develop your skill. If you want to be any skill you want to develop, you need 3 to 5 years. It's not that you open an account in Zerodha and put in 10,000 rupees and you might be lucky enough to make 20,000 rupees out of it, and that is even worse.
That's the dream that's sold basically on social media these days.
But it does not. Why are 90% people losing money if that dream is so real?
For sure. Speaking of dreams, a lot of people go out of their ways not only to do features and options, but then get into other assets such like forex or currencies, which are even harder to crack, as the market cap of those is way larger. It's global, goes like a lot more money is there. So given that, a lot of more minds, there's a lot more competition, a lot more cutthroat, right? That is there. But apart from these markets, what other asset classes, or like where should one start, or once they are getting consistent returns with stocks and they want to explore other asset classes, where they can look to, like
See, that depends. Again, now you've given me a criteria that the people who are making reasonable good returns in
Yes.
stocks and they're very happy with it. Then you have many assets. You need to diversify. Diversification is the only thing. End of the day, you need to protect your capital. You need to have, what I say is, you need to have 6 to 7 uncorrelated income streams. As simple as that. That is the best diversification you can have in life. Build 6-7 ways of making money which are uncorrelated. So 2 or 3 are not working in a certain time frame, 4 are other working. So it's one asset class. Then you can, if you want to go to passive, you can go to real estate. Since you're making reasonable money, that can give you a passive income of rent.
and
can get
also a very
commercial
stable
property.
asset.
You can of course go into gold and be more secure. Then you can get into cryptos as well. There's nothing wrong in investing in Bitcoin today or Ethereum. Of course, don't go for shit coins. Don't get an expert. But that is just your diversifying your cash flow so that you don't get minimum impact of any kind of uncertainty that comes.
Okay.
Diversification, is necessary. So if you have a small capital, like if you have a few lakhs to sort of invest, then you rather go for only equity.
Yeah.
When your capital gets big, 5 crores, 10 crores, you know what I mean? Then you need to diversify with assets with completely, like you said, uncorrelated risk, because anything can happen. And example is, if some event were to happen where equities all around the world fell. Now all equities will fall, whether you have a good share or a bad share, or small cap or a large cap, all equities will fall. But in that case, gold might not fall. And nowadays for retail investors, in fact, it's better, they can take an exposure to real estate via REITs. So those are like your investment, you are investing in the real estate sector, but your investment it's like mutual funds basically. You're buying, so you can buy for like $300 or $500 or how much ever, you know what I mean? Small amounts. And in fact, you're investing in real estate. So nowadays there are many more options for investors, but ideally your end goal should be to build a well diversified portfolio.
100%.
Assets.
Again, coming back to assets, I've been seeing your guys' videos from the past few months, and Indian market has rallied from like 18,800 to like 21,000 plus right now. How do you guys see it play out in the next year or next 5 years, as the world is looking towards India, as Indians, people are feeling, there's a common, feeling around the crowd now that it has risen so much. There's a crash that might come, because after 2008, everyone assumes crash, like when it rises too much, a crash will come. People are not looking at fundamentals, which may indicate up and down or whatever. So is this common agenda right? Because as much as I've read in 2008, right, people did not knew, even the best of the best didn't knew a crash was gonna happen, and that's why a certain such drastic crash was there. Now every kid who's starting up says a crash will come. So is a crash to come, or are we looking at a reverse crash or super rally, or the exact opposite thing?
The biggest threat was America hard landing, as in they predicted that America may go into recession because of the interest rate rises. Seemingly now they've almost averted that. So either there is a very minuscule chance or no chance at all for them to have. So that was averted, and now in fact the cycle is changing. So things have been much better. All the economic indicators have been picking up, at least in India. You know what I mean? So we are actually looking at the start of probably a next bull run. In between, yeah, sure, you can have a minor crash here and there, but overall the structure looks good to me, and especially for India, it looks really good for India. A lot of stuff is happening in India. Government is spending in a big way, and we played all our geopolitical cards also correct. So I keep saying that growth rate, that exponential growth rate that China had from 1990 to 2019, now that period is coming upon India. So personally, I'm very bullish on on all the time frames you said, 2 years, 5 years,
Yeah.
whatever it is. And of course, in the middle, if there are some small crashes, one can deal with it.
That's the way market works, right?
That is the way market works.
Oh, I agree with Ali that India has a very bright future, and I'm also very bullish, not on the markets, but on the Indian economy. I'm definitely very bullish. Coming back, it said two things. One is people are scared right now. They're always fearing a crash. It is about to come. It is about to come. This is what you said. You know what happens is this is the mind market creates. Today you feel the crashes are coming because you've seen a crash recently. The market will rally for 2 years, then you will not see a crash coming, then you would have forgotten. This is how the human mind works. The closest traction that it had experienced will be the expectation to experience it again. What happens in the market? I'll give you a very good example. 3 years back, banking stocks were peaking on their MPS quarter by quarter. MPS were growing. There was frauds. There were scams that were coming out. ICICI Bank, Yes Bank, this bank, everything was happening. And people thought banking stocks the worst investment to get into because the NPS was growing tremendously. Suddenly, when the MPS peaked out and the government came to regulations, banks are more disciplined and everything was sorted out, then banks' balances started to improve. But people were always in the mindset that banking is the worst time to be. Today, the banking stocks have rallied the most in the current rally.
Like,
So this mindset keeps on changing. Right now you're expecting crashes are not coming, bro. This is not the time. When you're not expecting crashes, like you yourself said, is the time the crash will come. Second point which you came to, you said market, what do you see in the future? Market is the future. Markets don't operate on the present. Market operates on the future. The price what you see is the discounted price of the future of the Indian economy or the stock prices. So this is the future. What you're seeing is the future. So market is showing you the future. If market is showing you the future that is going up, it is going up. Market will crash in the assumption that in future something can happen which can impact the prices.
for sure.
Coming to the third point, markets always come back to their mean. Price has this habit, it will come back to its mean. If you understand the fundamentals, you would know when market has overreacted, whether it's greed or fear. So eventually it has to come back to its mean, then it can react in either way. So you need to learn to understand before, if you want to get too active in the markets,
Yeah.
then when the market is too greedy and when market is too fearful, because that's when the real money is made.
And actually, despite all this run up, also our long term average, our PE average of the price earnings average of the Nifty itself is right now somewhere close to 20, which is near about the long term average. So it's
Yeah.
not that it's gone.
Way too
yeah,
bad.
because our earnings have also this quarter. All companies' earnings have
Yeah.
improved significantly.
And to give you a bigger perspective, when the 2020 crash happened, and when 2020 crash happened, PE was around 45, and when 2022 crash happened, PE was around 37. So to give more perspective to what he's
Yeah.
saying.
That actually.
So you can imagine,
that is,
so this is not a bull run, this is a beginning of a bull run. What you call crashes are the pull down. Market will not move this way.
Yeah.
It will have distribution, it will have selling, people will exit, new people will enter. This is how markets operate, demand and supply.
For sure. So speaking of number one, as you said, government has like spending or investing heavily in a lot of different sectors, and economy is growing. So going forward in Indian stocks or in Indian equities, which are the sectors that you guys are pretty bullish on, or which are the sectors that people that are lagging behind, or
Lagging behind, see, there are a lot of sectors which the government right now is keen on growth, and India is a self-driven domestic market. So everything they want to produce, make in India, made in India, consumed in India, and then exported to India. This is how the structure every country in the world has used to become a superpower. It's as simple as that. So sectors, when you come, government wants to emphasize on technology, they want to emphasize on green energy, they want to emphasize on defense, they want to emphasize on AI. So all these sectors, anything related in India, is gonna see massive growth. And
For
then
sure.
comes all the IT sectors, and either way all sectors are going to combine together. They're not going to be lagging sector, but at this point, as we see which sector is going to outperform,
Yeah.
so these 4 5 sectors themselves are going to outperform.
Pretty interesting.
So the government has it has allocated in this last budget all-time high amount of 10 trillion rupees for infrastructure sector. So obviously they're giving a boost to the infrastructure. Then they have allotted 2.5 lakh crores, 2.4 lakh crores, 2.4 trillion rupees to the railway sector to enhancement of our railway infrastructure. Basically, they want to build more freight, freight lines all over. They're going to build 3 dedicated freight corridors as well. So a lot of money being thrown into the railway sector. And I think just yesterday we read, or it was today, that they're going to order trains worth 1 trillion rupees
Wow.
recently. So
1
they are,
lakh crores.
yeah, so they're going all out over there as well. IT sectors and evergreen sector, it went through a 2-year lull period, and now it's
picking
now it's
back
coming.
up.
So it's cycles. It's all on cycles. Now example, the chemical sector, after a great run up in 2019-20, so in 2021 and 22, it's just been giving you negative returns. You know what I mean? So it's bottomed out pretty much. Now their cycle is expected to pick up soon. So
Interesting.
it all varies, but yes, the government, and of course my favorite sector, personally my favorite sector is right now the green energy sector, which I tell everyone, because we don't have any other option.
Yeah.
I mean, just look at all the calamities that are happening worldwide as well as in India, with all the floods
Yeah.
and all that scenario, cyclones and whatnot.
And the commitments being made by the
Yeah,
government.
commitments being made. The
Yeah.
G20 was here in India. Then just I think last week the COP28, that was a historic deal in Dubai. Dubai being a petro state, they went over there. World leaders agreed on the fact that, and this language was used for the first time by all world leaders combined, saying that we agreed to reduce fossil fuels and triple renewable energy capacity by 2030.
Wow.
Announcing something like that in Dubai is like a statement by itself. So they're serious about the green energy sector. So that is another sector that's in.
A lot of alpha right here, right? Speaking of energy, a lot of things happened with the Indian household name that was doing pretty well in 2020, 2021. And suddenly a Hindenburg report comes out, and we all saw what happened. It pretty much crashed, and again somehow it seemed to survive, and now it's rallying back up again. So what are your thoughts on it? How do you see it playing out in the future, and how should one...
See, first we need to understand what has actually happened. I'll give you my perspective. There have been many perspectives. It's Hindenburg is playing their own game. Everybody in the market their goal is to make money, right?
Yeah.
They play their own game. They have this concept where they see as something which is very overvalued. They find flaws in it. They get some loopholes in. They build their positions. They dump those news in the market. Make sure the company tanks. They see the liquidity. They are fully aware of what is happening. So it's a structured model in which they make money. And they do that where they find the best opportunity. There was a rally in Adani stocks which was showing them way overvalued, beyond imagination overvalued. A PE of 400. What is a PE? Basically, it's something where you discount how many years it will take for that price to reach the actual price of the stock today. That's PE. It's complicated, but in simple term, it will take you 400 years for that price to be matched what the market is discounting today. You're not going to live for 400 years. I'm not going to live for 400 years. So either the earnings has to go up or the price has to come down. So they find that mismatch and they capitalized on it. They made money, they exited.
Yeah.
Now they're out. litigation aside, whatever the court decides is the final right decision. I'm not judging that. I'm saying after that they have done their job, they are out. Now Adani stocks, how they perform is strictly on how the companies perform, and they are entering the right sectors. You cannot deny that. Anything that they're doing is basically they're entering every sector where they see a future.
So my view is, I personally don't track the Adani stocks very frequently. I tend to sort of just stay away from them because their price has run up way more than any fundamental factors. If you read their balance sheet and if you see their financials, their price is unjustifiable. They are into the right sector. They clearly know how to. They're basically into regulated sectors. That is what Adani is into. Power, gas, now cement. All these are highly regulated sectors. So he's managed to play that game and build it up. But it's they say that there is one leg of rally still left in Adani stocks because at the time of the Hindenburg report, the price at what it was, it crashed. Obviously, it recovered, and now after the Supreme Court latest judgment, it sorry. After the Supreme Court judgment, it rallied some more, but it's still not up to that price as yet.
Exactly.
So people have said that with all that now behind it, finally there is one more leg of rally still left, but don't take my word for it.
Yeah. Speaking of fundamentals, 2024 fundamentals. What are the fundamentals? 2024 fundamentally, how do you see it playing out?
The biggest event is interest rate cuts. It's going to start in the US, and that turns everything on its head, basically. So the stock market rallies and rates are obviously cut, so stuff becomes cheaper. Home loans become cheaper, and car loans become cheaper, and
borrowing money
EMI,
becomes easy.
EMI becomes cheaper, so people have more money in their pocket and they can spend on, let's say, items, non-essential items or non-discretionary items more. So that whole spending, the flow starts again.
Flow of the cash.
Correct. So what they used to say for startups, funding winter.
Yeah.
All that is also going to end. And when people have more sort of easy money in their pocket, it goes towards risky assets. So logically, you would have your small cap, micro cap stocks flying. You would have crypto going through the roof, which everyone is predicting the next bull rally is.
Bull rally, halving around the corner.
Correct. More than halving, and more than the BlackRock ETF for cryptos. I personally, while that does help, I personally think that interest rates play a bigger role in the bull market that we're going to see in cryptos,
For sure.
more than the halving and more than the BlackRock ETF. Of course, that the BlackRock ETF gives cryptos legitimacy and brings it into the real world. You know what I mean? So all that does help also. But yeah, so you're talking about macroeconomy wise, I would say the biggest events are obviously
Interest rate.
Yeah,
cuts.
definitely. Interest rate cuts would be the biggest event, but there are few things that has to be panned out. Why is it the biggest event? If you think about it, as a business, if you're borrowing money at 7%, S&P index gives an average return of 9%, and you're getting a return of 9%, it's not worth borrowing the money. But when the cuts start, the borrowing becomes cheaper, and that money comes into the market because then it becomes risk adverse, as in people are willing to take more risk, and markets can stay unrealistic for a longer time than you can imagine. That's where the real bubble builds, and then the bubble busts. So that's another cycle which balances the interest rate cycle, because every bubble starts to build when the rate cuts begins, and by the time they bottom out, which can be a time of 2 years or 3 years, and some events happen which leads them to go down further when the government is not willing to cut them anymore. We have seen that in COVID crisis. We have seen that in subprime crisis, when the interest rate was zero and stayed zero for the longest of time because government did not have a choice but to keep them at 0%. That's when you see euphoria. That's when markets go crazy. Financial markets, because the money you're getting for literally free and returns you're getting are extraordinary. So that's where you need to realize the bubble is starting to form at its peak, and that's when you get to know the next crash is coming, and that crash is not going to be a light crash. That is the crash I'm talking about, like 2008 crash, 2020 crash.
For sure. What are like couple of, or let's say 2-3 biggest skill sets one should have or one should build up moving forward if they invest in the markets? Is it like being emotionally, keeping your emotions aside, or is it
It's
more
just discipline. That's it. Figure out a way how to invest or trade if you want, and be disciplined towards it.
everything that
You can
covers
start
everything?
with the simplest thing of setting up an SIP, for example. Somebody who's just coming into the market. That discipline means every month I will invest so much amount. I would say that's the most important skill.
In the market, see, as an investor, you cannot have same skills as a trader. Investing is a passive thing. It's the most boring thing in the world.
Yeah.
The more boring you are, the more money you make. Trading is also a boring thing.
Yeah.
But it excites. So there the mental factor comes in
For
more.
sure.
Because every time you get a temptation, you have to control yourself. Here in investing, it's boring just because you're bored. Out of boredom, you take a decision. That is what you have to control. That you
Yeah.
don't do that. But here, every time you're doing that. Every single day you are doing that. That is why trading is more mentally challenging. With the discipline, you need to have a mindset of not overreacting. We as humans tend to overreact to everything because we overthink everything.
Okay.
So those fear and all those you have to become a mechanical operation. You cannot bring in emotions during the market if you want to be a trader. But as an
Correct.
investor, just invest and just forget about it.
Yeah. Let's say 80% or 50% of people that want to invest right now in the market, stock markets, they don't know how to analyze a stock. So let's say in 2-3 minutes or in short, how do you explain someone simply how to analyze a stock, or like how do you predict its value, or as you said, it's discounted for the future? So how do you do your analysis for stocks?
Well, the simplest, the most basic way is you look for certain parameters. For example, valuation would be one parameter. So you see whether a stock, you compare it to other stocks in the same sector, and you see whether that one is overvalued or it's under. That's the most basic thing. Then you see that whether the sales or the revenue is trending upwards every year, whether profits are trending upwards every year. Something very important is margins. So you look at your gross profit margin or your net profit margins. Stability in margins is a very good thing. You shouldn't have one company which is like, let's say, 5% margin in the first year, 25% in the second year. It is not, that volatility should not be there. Then you know that it's a long-term compounding thing. Another very important thing is cash flows. So you look at these basic sort of parameters, okay, and you see whether a company is fixed, and it's a continuous job. It's not like you sit with a company and you analyze it in, let's say, 1 hour or 2 hours and you're convinced. Good conviction builds over time. Over time means I'm reading about, now it's on my watch list. I'm studying that company. I'm reading about it. So naturally, when I'm flipping through articles, if something comes on that company, I will obviously be more encouraged to open it. So you keep reading along the way, and you keep taking bite-sized chunks. If you're a little bit convinced, okay, I'll take a little bit of a position over here. I'll see how it goes. It's like a relationship. It's like a relationship you're having with a person. You need to get to know that company. You need to get to know the business properly before you invest, and you need to be convinced about it. So that is the way. That's how I would go about it.
See, this is the process I agree with should be used. This is the right way to approach a stock. You don't just jump into it and out of FOMO and just say, okay, everybody's buying Adani, I'm buying Adani. Everybody's buying Suzlon, okay, I jump. If you want to learn fundamentals, there are few things you need to understand which are very, very important. I'll name 2-3 of them. One is you need to understand the ratios. Ratio is the most important one. You need to understand the PE ratio. PE ratio, price to earning ratio. Then when you get the value, you get a PE ratio of the company, you have to compare it with the industry's PE ratio. That defines whether the company is undervalued or overvalued. If the PE ratio of a company is 20 and the industry PE is running at 100, that means the company is undervalued. Some people think it's a good thing for investing. I don't agree with that. It means that there's something wrong with the company which the market does not know.
Pretty interesting.
Why would people leave something that is worth 100 rupees at 20 rupees? And there are people out there who will have that information, and if they're doing that, there's a reason behind it.
For sure.
So the PE ratio of the company should be around the PE ratio of the industry. That is where it will be considered fairly valued. But then you have to understand that high growth companies will never be cheap. They'll always be expensive.
Speaking of that, there's a lot of buzz around growth investing, value investing, and other terms out there.
Yes.
A lot of different theses. Which one you guys believe in the most, or is it more around?
That's what he is, a value investor, and I am a growth investor. So this is because he will find the best value. He goes with the more, I feel, intrinsic value. Am I right?
Not really. If you see my stocks, it's all high growth stocks only. 90% of my stocks are all high growth stocks only. I am basically an opportunistic investor. I don't follow per se any one model. I'm an opportunistic investor because I'm in the market. I mean, it's my job, so it's my day job. So I'm in the market. I do follow the market. So when I see opportunity and I see undervaluation, I buy. If I see overvaluation, I sell. But I am more geared towards high growth stocks because I am young. I do have the risk taking capacity, so that would align me towards high growth stocks also. But it's important to keep a balance in your portfolio.
So I see a lot of content creators posting about multi-baggers, and people in general are interested about what's the next multi-bagger that's gonna make me 10x or whatever it is. So how do you guys look at multi-baggers in your space?
I think there's a big myth in the public sector that multi-baggers are penny stocks. Like people start to think that a stock worth 50 paisa, 1 rupee, 2 rupee will become 200 rupees is a multi-bagger. That's basically a 100x return. But they don't understand that they need to figure out why would they become a multi-bagger. Not because your friend is saying it will become a multi-bagger. Do they have any factor that make them multi-bagger? In markets, good things are not cheap. Always remember. If you are finding it cheap, there are so many people smarter, wiser than you. They will find it cheaper before you, and by the time you identify it, it has already become expensive. This is the reality. So when people say they're finding something for 2 rupees which will become 200 rupees, why has it been ignored by so many people with billions of dollars or rupees or whatever, unlimited amount of resources and information? They could not identify it, and you have. Wherever you are putting in your capital, and it will become multi-bagger. So the concept is very different. Multi-baggers are basically the companies that can consistently keep on growing and adapting. They need to have a business model that grows, that makes them a multi-bagger. It doesn't mean that's a cheap stock. It could be a stock which could be already a 10,000 crore company can go up to a 100,000 crore company. It is already a multi-bagger at 10x growth. A 2,000 crore company can go into become a 100,000 company. That's when it becomes a multi-bagger.
For sure.
It doesn't mean the stock price has to be. Its stock price can be 5,000 and can go up to 50,000. Get it? It will not be cheap. Multi-baggers are not cheap stocks. Multi-baggers are the most expensive stocks that keep on becoming expensive, like Nvidia.
Crossing $1 trillion in market cap this year.
So Nvidia was never cheap. It was 5 years ago. It was the most expensive stock in its niche. Till today it is. That's the concept of multi-bagger.
So multi-baggers, while I do agree that these small stocks, penny stocks, there's much more chance that it's going to go to zero than become a multi-bagger. But you do end up, if you're lucky or... So multi-baggers, mostly the ones which you are referring to, within 1 year they multiply so many X. That happens in euphoric bull markets. That happened in 2020. for those 3-4 months when the markets really rallied like crazy, or a little more than that. And now again we are at the start of the cycle or something like that. So you will find multi-baggers made. And yes, you can come across multi-baggers in the sense that, well, I just recently did an Instagram episode on one multi-bagger, CG Power, the company was. So in March 2020, the price was just 5 rupees. It was quite a good company once upon a time in the early 2000s. Then the promoter kept buying businesses with using debt, and then finally when those businesses failed, then the company started going down. Then he sold a profitable division of that company. Instead of giving the money to the company, he took it home. So basically, considering all this, the stock price fell to 5 rupees in March 2020. CG Power, the board of directors evicted the promoter, and the Murugappa group, which is known for turning around companies, they are called the Tatas of the South. They bought CG Power at a very cheap price, and from March 2020 it was 5 rupees to today it is 460 rupees.
Wow.
Yeah, so that is a case of a turnaround company. Even in the last bull market, I remember Tata Teleservices, Tata Communication, I think, it had gone up 30x in like I think 2 years during the last euphoric bull market, So you do find multi-baggers, and they say that there are ways to identify. It's not an exact science, obviously.
Yeah.
So sometimes what happens is when the order books of some of these companies really explode, they get a lot of orders, and their profits are also increasing, their orders also increasing, they're executing it well, showing up in their bottom line, their profits also increasing, but the share price does not increase. So in such a case, there is quite a disparity.
Yeah.
So when that disparity catches up, the stock price really goes up.
People don't understand that revenues do not match cash collected or how books are kept and all those. So coming back to what's being hot right now, especially in the Indian space, Indian markets. This year I've seen a lot of IPOs. I'm not into it, so asking out of curiosity, what's keeping the IPO market hot? Why are the retailers so much interested, and is it a good vehicle to get in, or like is that too general of a question? How should one look at like IPOs?
IPOs are good. If you're applying from the retail category, it's not much capital also, 15,000. Okay, your capital will get it'll get blocked for like 3 days till the IPO comes into till it lists 3-4 days, whatever it is. And if you get allotment, see, IPOs are directly proportional to, again, the sentiment in the market. So in 2000, see, our market peaked out in September of 2021 until about, let's say, March 2023, it was sort of a down cycle. Okay, so during that period, a lot of companies, Ola for example comes to mind, Oyo comes to mind, and there are another few also. They delayed their IPO. They were supposed to come up with an IPO, but market conditions are not good. No one's going to buy. Sentiment is not good. So we won't come out with the IPO. And so I think there was an IPO drought also during that time. Like how we had the funding winter, there was an IPO drought also. But now again, the markets have turned, the sentiment has turned. So a lot of IPOs are coming out. A lot of companies. One good way to see, to judge an IPO, there are many, but this is one good way. You see whether that IPO is just an exit for the investors or some amount is going to the company. So there is something called offer for sale in an IPO. Basically, let's not get technical.
I think we should talk about it.
No, let's not get technical in the sense that an IPO should be not only be an exit to investors. Some of that amount should go to the company.
How do we identify that?
It's written in the IPO. How much is offer for sale and how much is the other portion?
Offer for sale is basically amount going to company or investors?
Investors are selling their share to public.
Got it.
That is offer for sale.
That will all go in the investor's pocket.
Pretty interesting.
So an offer for sale is not as desirable as, let's say, the company getting some money. You know what I mean? So, and usually when investors offload, obviously they want the best price. So they will try to overprice the IPO. That's one of the parameters. But yeah, IPOs is a good way for investors to sort of make a little bit of money. When the market is euphoric, you know that it's going to list at a gain anyways. Tata Tech, for example, 160% recently. That was one of the most
Yeah.
popular, I think the most popular IPO of 2023. So you have those kind of companies that are, in fact, I just did one list in which in the last 5 years, I can't get the company that topped the list. Listing gains, highest listing gains in the top 5 in the last 5 years, and the company that had the top position had a listing gain of 280%.
Wow.
Yeah. So if you get allotment to something like that and you sell it even the next day, you're going to make like close to 43,000 or 42,000 rupees. You know what I mean?
On 15K.
Exactly.
That's why the buzz is around.
Now that's an exceptional case, but you get the point. You
But
know?
Yeah.
that is what makes IPO so exciting. It has that sense of adventure. It comes with an excitement that this might be the stock in which I will make 200%.
Yeah.
It might double on the day one. It might go 100% on day two. And first excitement criteria starts when you get an allotment. Disappointment comes when you don't get an allotment.
So it's basically like launch pads or ICOs or like that in the crypto space.
So
when the
it
tokens
has an
come.
element of, let's say, gambling a little bit. These popular
Yeah.
IPOs at least. Lottery.
Yeah.
Lottery system. Like for Tata Tech, everyone knew that you are going to get a very premium listing gain. You know what I mean? Everyone knew it was going to be more than 100%. So on your 15K, you make 15K more basically. It was 160%. 160%. So, by the way, I was lucky enough to get one allotment on Tata Tech. I applied from four different accounts. I got one. Sold it off the next day. But yeah, there is an element of lottery to it.
Yeah.
So that's what makes it exciting. But the real way is there is a document called the DRHP, Draft Red Herring Prospectus. You're supposed to read that document and you're supposed to understand what that company is and whether you can, whether you should be buying more shares. Like, there's one more thing also, like which has gotten popular recently is investing in unlisted companies. So, you go in the OTC market, read about a company, and you invest in that, and they will come out with their IPO 6 months, 1 year, 2 years, whenever.
Yes. I've
And
heard
in
about this.
that case, there is no element of luck because you already have the shares. So if you had bought Tata Tech from the unlisted market, let's say 1-2 years ago, and you're holding on to shares of that, and then it lists at such a premium,
Yeah.
then you're in business.
Yeah. For viewers, how that is different is it's different from private equity because these are just the companies that are given that they will give their IPO and you just.
No, there are no. They are public companies. So in public companies, it's not a private company. So it's a public unlisted company. So you can go to these special types of brokers, and from your Demat account, you pay them the amount, whatever you can invest for 50,000, for a lakh, for whatever your budget is. Sometimes there are minimum lot sizes.
Okay.
So you wire them the money.
You can compare it like a first round of fundraising, like in a startup.
Like Series A kind of.
Series
thing.
A kind of
Yeah.
test the waters.
Yeah.
Ki what is the demand in the market? IPOs companies usually test the waters. Ki how
Yeah.
much people are claiming the value of the company
For sure.
before going for an IPO. And then there's the offline market where the trade can be also done. You can sell also of the shares of the unlisted company because the other person will buy because there's unlimited amount of shares in the market.
Pretty cool. That's why I do podcasts like these because I get to know things like you just said. I didn't know about it and had a pretty cool conversation, guys. Thanks for coming on board and it was a pleasure.
Most welcome. Thank you for having us.
I'll just plug their socials. Just give them a follow on Instagram and Twitter with their socials right there. And see you around in the next one.